Good morning, everyone, and welcome to Weekly Profit Talk. As the name would imply, we do this every single week, and we do it Wednesday at 8:30 Mountain Time. That is 10:30 out here in the East Coast, and 7:30 on the Pacific Coast. And yes, we are currently in Huttonsville, West Virginia, on the edge of the Monongahela National Forest, mobile headquarters. So this week's topic was financial guidance, addressing issues from your tax return. Uh, Taking a look at the valuable metrics tool that your tax return represents now that we've got it done this past April 15th. And this is the next one in a series, and we'll wrap this up next week. So one of the things that I want to share with you, well, I think the big thing is the fact that as an entrepreneur, if you're a private practice physician, you're basically running a business. And however you report your income from that practice, you're not in Kansas anymore. In other words, you're going to have income that is not subject to withholding because you're, as a private practitioner, you're working for yourself, not for someone else. Withholding is your responsibility, and it's called estimated taxes. And this is the most critical thing I want to go over. If you had a tax return where you owed over $1,000, or you got more than $1,000 as a refund, you basically didn't have an ideal tax return. Let me tell you why. If you got a big refund, let's say, okay, you did good withholding and you've done all the things to make sure that you maximized your tax benefits, and you got $12,000 back, for example, you lost because you basically gave the federal government an interest-free loan for most of that $12,000. The ideal scenario in my mind is if you do a tax return, you owe the federal government about $500, and maybe your state, and 41 states have an income tax, a similar amount of money. That is as close to the bullseye as you can get. If you have a huge refund, you actually lost the purchasing power of that money. $12,000, that's $1,000 a month you could have been spending on yourself. So understanding estimated taxes is simple. You are not going to have to do something every single time you have a pay event like you do as a W-2 wage earner. You've only got 4 of these a year, and the dates are right there in this slide: April 15, June 15, September, and January. They are offset quarters. You'll see April is 3, June is 2, September is 3, and January is 4. We believe it's because the federal fiscal year ends on September 30th, and they like to get that money the last couple of weeks prior to that. So that is our personal opinion. But understanding these is critical. Now, I've made a note down here at the bottom. We'll go into that a little bit more detail in a second here. But annualization is basing each payment on the quarter's performance. That is one of the ways in which you get into that situation where you're way over withheld. Let's say that you're using your own tax software, or you pay somebody and they provide you 4 vouchers, and they're for the exact same amount of money for each quarter for the coming year. 2025 is what we're looking at. And it's like, well, if you pay that, then you should be okay. Well, the thing is, there's so much wrong with that. Performance issues, vacations, you take some time off, for example, or any kind of a slowdown, or on the other side, what you're trying to do, the object of the game is an entrepreneurial endeavor, is to scale your business and go bigger. So how much? Now, the IRS version of this is you have to pay 90% of your tax liability for the current year, or 100% of your previous year's tax, whichever one is lower, by the way. And it's 110% of your adjusted gross income is over $150,000. But it's good to know those things. But honestly, if you focus on annualizing your payment so that you are making an estimated tax payment based on the actual performance of the previous quarter. Now, we are in the middle of the second quarter, and that, in fact, wraps up on May 31st because it is a short 2-month quarter. What you would do is you take your performance from January through May, that's 5 months, multiply that by 2.4 to get 12 months. There's your income for the year. Figure the tax on that amount, divide the tax by 2.4, subtract whatever payment you made in April 15th, and there's your estimated tax payment. That's annualization. Sounds simple when I say it that way. We actually go into quite a detailed process, and this is what we do for our clients every single quarter. You have to, of course, look at your entire situation. If you're married, your spouse has income. Um, if she's a W 2 wage earner, there's going to be withholding there. All these things need to be factored in. If he or she does some kind of side hustle, let's say creative endeavors such as making something for craft shows like pottery, for example. I'm just the air here, but basically, you need to account for that income and ensure that it makes it into your estimation. So it's important um, to make good estimated tax payments each of these four estimated tax payment deadlines. You should be actually looking forward to your doing your tax return in 2026 because it should be a measure of the metrics of your year just gone by and make you nervous because you've been making estimated tax payments the entire time. So let's address some other issues from your tax return. Um, Unexpected high tax liability, we've been talking about that. Let's say you owed $10,000. That hurts, right? I mean, you've got to do something to pay it. Either A, wipe out a savings account to get that paid, or you can take it out of your business. Understand that when you do that, that's a distribution from your business. Okay. So that is not a business expense. And if you are in a position where your distributions are pretty close to your net income, taking a large additional distribution can actually put you on the edge of paying additional capital gains tax on distributions. So you need to be careful doing that. That's another good reason to make good estimated payments. So missed deductions, it happens. You want to make sure that you're getting everything that is ordinary and necessary to your business. And a thing I've been harping on the last month or two for we entrepreneurs, business development. I know you got continuing education. So do I. We've got so many credits that you got to fulfill to keep your licensure, your credentials, or whatever. But you may take additional outside sort of business development, like getting a coach that help you with marketing, for example. This stuff is all legitimate write-off. Make sure that you're not missing these. Tracking credit cards, I've got that written down here. Your credit card should be attached to the bank feeds of your accounting software. These are expenses. And then when you pay your credit card statement balance, and please do pay your entire statement balance each month. Credit card is a tool. It's not meant to be high liability debt. You don't want to leverage your credit card. That's where you get into trouble. So, but you basically run your business credit card transactions as expenses. And then when you transfer money from the operating checking account once a month, pay off your statement balance, then you basically just have a transfer of funds. Okay, so that has no effect on either the profit and loss or your balance sheet. So properly categorizing business expenses as they happen, I can't tell you how important that is. If you've got stuff that you haven't coded for 3, 4 years back, how do you know what the score is? It's like trying to play a game of basketball and you don't know how many timeouts you have left with 3 minutes left to play. It's not a good situation to be in. So reporting and compliance. There's probably some kind of checkbox. Did you have payments that require a Form 1099? I want to go over this at adamant terms. Your Form W-9 is required by the payer before work begins. Let me say it again. Watch my lips. Forms W-9 are required by the payer before work begins. Don't pay a vendor a single dollar until you get a W-9 from them. Now, if you know they're corporate, an incorporation, or they are taxed as an S corporation, they're not required to file 1099. But if you are not 100% certain of that, you still need to get a 1099 from them, and they got to check the box. Now, if they check the box corporation or S corp, great, you don't have to give them one. But then now you have the evidence, and you can produce it in the unlikely event of an audit. Okay. Ensuring that your payroll taxes are filed and reported properly, even if you're paying an outside vendor. Um, I actually used to calculate payroll taxes for the handful of clients that I had when we were first starting out. Honestly, as a larger accounting firm, I found that it's not worth it. Finding somebody out there like Gusto or Patriot or ADP to do this for you, um, despite the fact that it has a cost, remember that time has a cost too. So, and certainly in your medical practice, you're not going to want to train your office manager to calculate all that FICA stuff. You just absolutely need to have some kind of a payroll server. If you are looking to change accountants and you need payroll, that's something that we are able to provide, by the way. So, good thing to keep in mind. Quarterly planning and strategy. Let me wrap up on this. So, you want to review your budget versus your actual performance quarterly at a minimum. I think monthly is actually preferred. Developing the habit of looking at your holy trinity of financial statements on a monthly basis. And if you're not getting those or know how to get them yourselves, get help. And if you need help, that's what we do. So um, I'll actually close on that in just a second. But you want to be looking at your profit and loss statement, also known as the income statement. Um, this has three parts: the money that's coming in, the money that you spend on staffing and other creation of your revenue. And then underneath that, you have all your other selling and administrative expenses. And at the very bottom line of all that is something called net income. And that is what you pay your tax on. So understanding that is part of the score and how you play the game well. Balance sheet has your assets, and the total of your assets will equal your liabilities and your equity added together. Liabilities are kind of technically a capital form of leverage. And of course, so is equity, which is also basically just another word for capital. Um, but you want to be taking a look at things like unusually high amounts of distributions relative to net income. That's where you get into trouble with the excess capital gains tax. So, and statement of cash flows is the third one. You want to know um, what cash is coming in from your operating activities, and then what you're spending on capital expenditures, distributions, and money that you're investing in, um, and investing activities, as well as financing activities, which is going to be the pay down of the principal on your long-term loans, is what I mean to say. So, um, sitting down with these statements and looking at them every 15 or 20, about 15 or 20 minutes a month is really a very good practice. You can do that at some point when a, a day's wrapped up, say about somewhere between the 7th and the 15th of the month. I highly recommend that you develop that practice. Okay, so with that, um, the 1040 that you have completed and whatever business returns that you completed to get the 1040 information, these things are valuable metric tools, and they are definitely to be used to your advantage. You can't win the game if you don't know the score. So with that, let me wrap up by saying that I've offered help a couple of times while I was talking away there. So we're on 3 different media here: LinkedIn and YouTube, as well as Facebook, and they all have in common the fact that there is a comments option. You can pop something like help or call me or more information, more info, or just the word info. Pop that into the comments. We'll see that within 24 hours of any business day, and we will reach out and have a first time discovery talk. In 30 to 45 minutes, we'll find out if we're a good fit and to work together, and hopefully make you more prosperous in the coming years. So with that, have an amazing rest of your day and an awesome weekend. And if you do have a chance, do something randomly kind for a stranger today. So with that, so long, and we will see you next week. We will be in the month of May. So long.